Welcome, friends. Asli Bania welcomes you once again. Today we have brought you another multi-bagger stock which has a 5x potential, that is MEGHMANI or Connects. Now, coming into our standard disclaimer, we have prepared this report only for educational purposes only. Please consult your registered stock advisor with SEBI before investing in the stock. We will not accept any liability because of investments due to this report. Now, what is MEGHMANI Organics? MEGHMANI Organics is basically a specialty chemicals company, and it has three business verticals, that is pigments, agrochemicals, and basic chemicals. Pigments, it is among the top three in the world based on capacities. The FY18 revenue was around 587 crores, and the EBITDA margin was around 15%. The second is agrochemicals. So in agrochemicals, it is the leading pesticide manufacturer in India, and it is a good exporter also. So it exports to Brazil, US, and various countries. The FY18 revenue is around 642 crores, and EBITDA margin is around 15%. Then comes the basic chemicals. In basic chemicals, it is the fourth largest caustic chlorine producer in India. The FY18 revenue is 597 crores and EBITDA margin was 42.7%. Basically, if you see the basic chemicals, uh, it is a cyclical business, but currently the margin at almost at the peak. The FY18 consolidated revenue was around 1800 crores, EBITDA was 431 crores, at and it is growing at a CAGR of around 22%. So it is around half of its production is exported. So it has a presence in 70 countries. So it has four warehouses in Turkey, Russia, USA, and Uruguay, and it all the manufacturing is done in India. It has seven dedicated manufacturing facilities in India. So basically, it is a very diverse company. Uh, and it is not dependent on the Indian market. It is half of its production is exported also. So it is a very diverse player if you see. Then the capacity utilization for last few years are going up, and for the last years it was 84%, so which is quite good, and it is going to go up further in the next few years. And what management has indicated is like they would like to grow each of the verticals individually, and they are targeting 1,000 crores from each business in next few years. Now, looking at the financials, if you see the financials, there are very key things. The sales are growing, okay, and then the margin, if you see, 24-25% is historically the highest margin which they have enjoyed. Otherwise, their margins were in the range of 15 to 17%. And the other good thing is, MEGHMANI Organics have paid a lot of their debt back. It is around 300-400 crores. So if you see, the interest cost has gone down, and which is going to go down further. Okay. Now, if you see the latest quarterly numbers, there is a slight increase in the interest cost, and so it is I guess because there are a lot of facilities coming online, maybe for the working capital, or maybe what they are buying back the stock, they have given some money to 21 crores. Maybe because of that the finance cost has gone little bit up, but that's fine. It is not of a great magnitude that we should worry. Now coming back to cash flows, so if you see, company is generating good amount of cash flows from their operating activity, and in the financing activity, you can see for the last few years they are returning back their debt, so they are paying their debt. So interest cost is going to go down further. So which is quite good, and from the internal accruals itself, they are investing in their business, which is going to increase their top line even further in the near future. So it everything is very good on the cash flow front. Now the capacity expansion. Basically, out of the three verticals in the basic chemicals, they are going to go ahead with a lot of expansions, and with the expansions are coming online now. Like they have a CMS project of 40,000 metric ton per annum to produce MDC chloroform and carbon tetrachloride, which is operational in December 18. Expansion of caustic soda capacity to 2 lakh 71,000 metric ton per annum, which will be operation in June 19, and hydrogen peroxide capacity of 30,000 metric ton per annum, operational June 19. Basically, if all these capacities come online and all this, so the MEGHMANI organics top line CAGR, I would expect it will go beyond 30% for at least next 2 years. Now, drop in share price. Why the share price has dropped? So, MEGHMANI, basically the basic chemicals business is under MEGHMANI FineChem, which is a subsidiary of MEGHMANI Organics. The MEGHMANI Organics shareholding in MEGHMANI FineChem is 57%. And there was the international finance arm of World Bank, which IFC 25% stake they had there, and 18% stake was with promoters. Now what has happened, like IFC wanted an exit, and the 25% uh, stake was purchased by another special purpose vehicle, MACPL, for 221 crores. Now these 221 crores were provided by MEGHMANI Organics, and it will be immediately returned to MEGHMANI Organics after NCLT approves the deal. So basically, MEGHMANI Organics is not paying anything, and this shares are being purchased by subsidiary. In addition to this, what the special purpose vehicle is doing, they are buying another 24% from MEGHMANI Organics and extinguishing those shares for around 220 crores. So, and they will be paid with the coupon rate of 8% to be paid for over 8 years. Now, what will happen due to this? The MEGHMANI Organics share in MEGHMANI FineCam will remain at 57%, but due to this extinguishing of shares, the promoter stake will increase to 43%. And if you see all the major expansion being carried by MEGHMANI FineCam only. Now, because of all this, because it is a very complex transaction and very difficult to understand, and somehow it looks like that management had bad intent to increase their shareholding, and that's why they have done it. So that's why share has taken a beating, and it is at around a 52-week low at the moment. Now I have a very interesting perspective. Like if IFC wanted an exit, and if somebody else would have purchased it, so MEGHMANI Organics shareholding in MEGHMANI FineChem would have remained at 57%, which is now also at 57%. The only thing we are worrying is, like everybody is worried, is the MEGHMANI share promoters shareholding has increased from 18% to 43%. So I I I think because it is what management is saying is it is a cyclical business and they don't want to go beyond 57%, and they have consulted the big four organizations as well. Like yeah, this is a debatable topic, and a lot many discussions can be held over there. But this is a share market. If somehow some explanation comes at a later date, which everybody agrees, then the share price will shoot like a rocket. So we are getting the share price low because of only this. So I think the business is good. Everything is good. Nothing has changed. Only this transaction where even money has not flowed out. So that is a very good deal. But we'll not discuss it because it is a very debatable topic. Now coming to pros and cons, so debt is being paid, interest cost is going down. That is a very good thing. Capacity utilizations are going up. It is a consistent dividend player. So for so many years, dividends are being paid regularly, and promoter holding is around 50% in MEGHMANI Organics. Cons, like I have explained in previous slide, that people are not happy with the scheme of arrangement, and it will go to NCLT for approval. Now, final review. MEGHMANI Organics is available at price of around 60, P is around 7, and market cap is around 1500 crores. Like after 2 years, the revenue expected is around 3000 crores, net profit around 330 crores, which leads to an EPS of 13. So our final verdict is basically this time will pass, and slowly I would say after 2 3 years the make money will come at their original valuation, and what I am considering is the minimum price expected would be around 260 rupees based on a PE of 20, which leads to a very interesting 4.5x opportunity in this stock. This is a very good stock, and the management the company is performing very good for last so many years, and it is growing very well. So it is a very good stock to be in for next 2 3 years. Friends, if you liked my report, you can subscribe now to my channel by clicking on the link below this arrow. So thank you and see you next time. Bye bye.